Hello and welcome to the Trading Bell. I'm Nokip Kimbod. Today we'll have quite an interesting conversation, and this touches on derivatives. There's a topic that we've handled before, and it still seems a little bit averse when it comes to majority of the people. What are derivatives, and what is the importance of derivatives activity on the stock market? Well, I'll be having this conversation with Alex Karanja, who is the CEO of Scope Markets Kenya. Remember, they have just been actually admitted onto the next platform, that is NSE Derivatives Market Platform. Thank you very much, Alex. Welcome to Trading Bell.
Thank you very much. Thank you for having me.
Yeah, so quite interesting. Derivative market. Here are the NSE unveiled in 2019, relatively young, but it's something that has been there. For starters, I think it's important for us to lay the foundation. When we talk about derivatives market, what exactly do we mean?
Thank you once again for having me. So in essence, derivatives are financial instruments that derive or gain their value from an underlying asset. So what you're basically doing, as opposed to, for instance, buying into a share, getting into the market to buy a Safaricom stock, which will probably be costing you upwards of 30 shillings per share, and say you probably wanted to gain or to buy 1,000 Safaricom shares. That would then require quite a bit of capital.
Yes.
What a derivative allows you to do is you get into a financial asset that derives its value from the underlying asset, which in this case would probably be Safaricom. So you have gained access or exposure to this particular stock with less capital than you would had you gone into the Nairobi Stock Exchange to purchase 1,000 shares at 30 shillings per stock.
Okay.
So long and short, it's a financial asset that derives its value from an underlying asset.
Definitely.
Yes.
And what are the vehicles, when you talk about derivatives, what are these instruments that are utilized within the derivatives market that are active in the Kenyan space?
So before this, first and foremost, even as we discuss this from a Kenyan context, it's important to mention that derivatives have existed for the longest time in other developed markets. So what and Kenyans have in the past been able to participate in these markets. So what Scope Markets has done, courtesy of the approval and licensing we got from CMA today, and having been onboarded by the NSE, is that we're able to give the same value to local customers that they would have derived from having dealt with brokers out there. So in the past, having had varied discussions with the regulator, we realized that there's probably a couple of other things we needed to do to create more depth in our markets. We realized that over time, perhaps the reason why the markets were not as active and were probably left to the confines of wealthy individuals or institutions was because of the capital outlay that would be required for you to participate in the market. So with derivatives, we're giving clients, retail clients, the same exposure to the same market as better capitalized institutions or individuals would have had in the past. So here what you're doing, again, just going back to the example of Safaricom, say you want to, it only makes sense to buy a material amount of shares for you to be able to benefit from price differentials. Now, for you to do that, again, for the better capitalized individual, that would have been easy. They have the capital to have acquired shares at whatever price, significant amount, and they'll be able to have taken advantage of that. So here what we're doing for the retail customer, with the derivative instrument that we're offering through the NSE, the client is able, for a very minimal amount of capital, gain the same exposure and take advantage of price differentials as would that individual who is better capitalized and who has definitely doubled in this market longer than the retail customer.
That's quite interesting.
Yeah.
So this market, it's based on sort of the ups and the downs.
Yes.
The volatility of it. So if the market is pretty still, and let's assess honestly
Yes.
the Kenyan market.
Yes.
If it is not that volatile, there's no much movement, how do you actively engage in that?
Again, volatility comes in on account of a couple of issues or a couple of reasons. One, of course, is depending on business performance of the companies that are listed on the Nairobi Stock Exchange. It could also be very much affected
Yes.
by what is happening also in the geopolitical world. What happens in Ukraine definitely also has an impact on our markets. Again, what's happening in the Western world with pushing up of rates, that definitely also has an effect on the market. But another thing that also causes market movement is where there are lots of buyers and sellers, where there is enough turnover for an individual to better take advantage of opportunities that may come up.
Okay.
So for the longest time, our market has probably only moved up and down based on activities of larger institutional clients who have traditionally not perhaps been getting in and out on a short-term basis. For them, it's more of a longer-term view, hence the reason why a lot of these share prices will probably not move as much to have given the retail customers opportunities to better take advantage of price movements.
I think something important, because looking at the Kenyan market, yeah, for the longest time we've cried about the issue of, first of all, market depth and
Yes.
market participation. From our charts, there's the information bit of it in terms of having more people come and participate in the market. But secondly, also from a product perspective, what are people coming to partake? And for derivatives, for players like you coming on board, what does that mean for these two aspects, market participation and building market depth?
Okay. I think before I answer that, I'd want to take a step back and probably perhaps speak about who we are, what we're doing in Kenya, what we've been able to achieve in the number of years we've been here, and probably tie that down to why the NSE derivatives. So scope markets, Kenya is part of a globally recognized entity called Scope Markets that is headquartered in Cyprus. We have offices, a global headquarters in Cyprus. We have offices in Europe, offices in Africa. In Africa, we have 3 offices, one in South Africa, one in Nigeria, and here in Kenya. In Kenya, we're registered and regulated under Capital Markets Authority as an online non-dealing foreign exchange and derivatives broker. So amongst the things that we do is we offer Kenyans the opportunity to dabble in global markets. We give Kenyans the opportunity to invest and trade in global physical securities, in forex, in commodities, as well as precious metals. So this for us was a way of helping Kenyans diversify on the investment and trading products that they're already exposed to, but now we're doing it from a safer space for them. Being a regulated entity, being one of 8 regulated entities in Kenya, we give Kenyans the assurance that when they trade through us or they invest through us, their money is safe.
With the online space also comes a lot of risks, which you have to counter.
Yes.
You know, especially you've mentioned you are in forex.
Yes.
Now that is the booming, topic in the country.
Yes.
A lot of people, we are making forex, money in forex and whatnot. And a lot of scamming accusations, people losing a lot of money. And there are licensed, players in the market. People differentiating that and just mitigating that risk, given us majority of these activities move into the online space. How can that be done effectively?
That's a very good question. Again, as I said, what we are offering to clients is not new. Forex trading is a phenomenon that's been there for a very long time. What we have done, and hence the reason why I mentioned the regulated bit of it, as an entity that's regulated by the Capital Markets Authority, I believe there are certain standards that have been set in terms of safety for us as an entity that's offering the product, and importantly also for the clients that are utilizing our products or utilizing our platforms to gain access to these products. So there's an influx, yes, or there has been an influx of a lot of unlicensed brokers. And it's through that then that Kenyans have been scammed. So working with CMA and the young industry that we are, we have put in place a lot of measures to help better educate Kenyans on who to use when it comes to gaining access to these markets. We have created forums where in the event of any issues, they know who to report to, given that we're regulated entities. And of course, there are regulatory reports and requirements that we are required to uphold to enable us then operate in the market that we do.
Yes.
Yes.
So back to derivatives. Talk about this issue of single stock futures.
Yes.
Yeah, because you offer the index bid and single stock futures.
Yes.
Maybe let's start with that particular product,
Yes.
single stock.
Yes.
How does that function, and how can somebody who's watching right now participate in that?
In fact, let me just give you a quick example. You probably have, let's pick Safaricom again.
Yes.
Safaricom for me seems to be the favorite because it's probably the most traded. It's the most traded stock
Yes.
in the market. So half the time, for you then to better gain advantage of price differentials over stock, it only makes sense if you buy a significant or material amount of it. Then with every small point of movement, either up or down, then you're able to gain advantage of the price depreciation appreciation. As we were chatting earlier on, I told you about Safaricom probably at 30 shillings.
Yes.
So assume you'd want to take advantage of price differential. You probably assume then that you want to buy 30,000 shares. That would require significant capital outlay.
Yes.
At 30 shillings, that's probably what? Close to 1 million shillings. Not very many retail clients can afford to put up that kind of money to gain that kind of exposure to a stock that with price differential would gain them a material amount in profit. So that in the past had been left to probably high net worth individuals or corporates. With derivatives, to gain the same exposure to the 30,000 shares and to take price differential advantage, with a derivative you'd only require a very minimal amount of capital, which is called an initial margin. That initial margin will be significantly less than the 900,000 someone would have put up for the 30,000 shares. But in the same breath, that individual who's put in that immaterial amount of capital would derive the same benefit a corporate has done by putting up a much significant portion in terms of capital.
KTN News. Get the whole story.
This Christmas, it's magical at Westgate Shopping Mall. Spend 1,000 shillings or more and stand a chance to win a fully paid 7 nights Western Mediterranean